Hello ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a technical look at the dollar versus yen as it stays bullish but respects technical resistance. I'll show you why that is the case. Let's start off by taking a look at the daily chart here. And what we notice here on the daily chart is this blue line and this green line. This blue line last week, the low from last week came right down to the blue line. That represents the 100-day moving average. And what happened there? Support buyers came in. That's more bullish. The buyers came in on the corrective move. The market moved higher. Now we are up near this green line right here. And this green line represents the 200-day moving average. That currently comes in at the 110.19, around the 19 level. And the market is leaning right against that level right now. So the bias is more to the upside on the daily chart, bouncing off the 100-day moving average, but we are respecting this resistance so far against the 200-day moving average, and that's going to be key. That's going to be key going forward. Now let's drill down into the hourly chart, and what we can see on the hourly chart in the last 24 hours or so is that the market's been trading today above and below the 100-bar moving average on the 4-hour chart. That's the overlay right here, the blue line right here. That was in the Asian session. And then what happened? The market started to find support against that 100-bar moving average, and that gave the buyers courage, I guess, to take the price up, and we found resistance early in the New York session against the 200-day moving average, and the market started to fall down in the New York session. Now the low in trading here today came right down, back down to where it all started, right through here against that 100-bar moving average on the 4-hour chart. Found support buyers again and moved higher. That's why the bias remains more to the upside. The bias remains a little bit more bullish. But we are trying to respect this 200-day moving average. This is a key level. This is a key level right now. It's a key level going forward. It's a key level on tomorrow's trade. If we are able to get above that level, that's going to push the market up to this topside trend line around the 110.32. That would be our next target on the top side. And if we get above that level, we're going to be looking for higher levels. In particular, if I take a look at the daily chart again, we do have this 110.47 level. This 110.47 level corresponds with the high price that we saw back in early February. In May, the market came up to that level, back down to the 200-day moving average, and moved to through that level into the upside. Stayed above that level for about 5 or so days before moving down. We haven't seen that level again since. So this level right here around the 110.47 level is going to be our next target if we're able to get above this 200-day moving average. So the bulls are trying to keep control, but they are respecting the 200-day moving average. We'll see if we can break above that level in trading as we speak or into the new day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.